Good day, everyone. So now I'll discuss topic bank assurance. This is the question: what do you mean by bank assurance? Explain the advantages of bank assurance and what are the different models of bank assurance. Basically, bank assurance is a combination of banking and insurance. That is when insurance services are offered through banking channels, that is called as bank assurance. So you can say that selling insurance products and services by taking the vast customer base of the bank, so that is called as bank assurance. We know that in India banking sector is regulated by RBI and the insurance sector is regulated by IRDA. So, keeping in mind the fact that the banks have huge customers and their database, so it was considered to be a good idea to take into account the insurance services also. So, as a result, the insurance companies also propose to bring insurance products into the lives of common man by making them available the most basic financial point, the local bank branch through bank assurance. Now, these are some of the advantages of bank assurance, although these can be categorized as the benefits which accrue to different parties. These are the common advantages of bank assurance. There is lesser cost because the customer base is the same. The insurance products are offered through the banking channels. It helps you to get more market share, sustain the market share because the customer base is enlarged and there are more returns. There is wider network because besides selling the banking products, the insurance products are also sold by the business house. You can get the benefit of experienced marketing in the sense that the persons who are already working in the bank, they sell the insurance products also, and they are, because they are in close proximity with the customers, it helps them to discover the needs of the customers and to promote them. I mean, they need not go anywhere else, and it gives a complete solution. Nowadays most of the people who are availing banking services, they avail the insurance products also. So it is a complete package, and it is not because both of these service, I mean banking and insurance, they belong to the service sector, so it is quite simple. And then comprehensive advice in the sense that keeping in mind the portfolio of the customer, the banks can give them an advice which is offered at attractive rates. So this is the category wise the benefit of a bank assurance. It is a win-win kind of a situation to the banks, to the customers, and to the insurance company. These are the benefits. You can have the look at these benefits. Now, talking about the models of bank assurance, there is structural classification and there is product based classification. So we'll discuss these one by one. Referral model: as you can see, this is clear from the name itself. Referral is made from the word reference. So here not much is done by the banks, but they kind of give the reference of the customers to the insurance companies. They partly, because it is not allowed that the banks part with or provide the information of the customer to anybody, to any outsider. But here there is a kind of an agreement between the banking and insurance company and the bank's part with the database of the customers with the insurance companies, and in return they get the fees. The idea is clear, the thought is clear, that this information is shared with the customers purely for the purpose of providing them insurance services. So it is simply giving reference. So actually the transaction with the prospective client in this model is done by the staff of the insurance company. This can be at the premises of the bank or somewhere else. The only thing is the banks provide the data of the customer. Now, corporate agency model. This is this bank staff, the person who are working in the bank. They are trained to make the customers aware of the banking products and sell these products to the customers. The basic idea here is that the bank as an institution acts as corporate agent for the insurance products, and of course here also a commission is involved. The idea is that the staff of the bank is trained for these kind of services. And but the thing here is that the staff of the bank must be properly trained for providing these kind of services. Then comes the fully integrated service. The fully integrated service model is comprehensive, it is inclusive, and there is a close relationship between banking and insurance, because in this kind of model, banks will have a counter within the market, the insurance product, as an internal part of its rest of the actions. So basically, to put it simply, I would say that here the banks having wholly owned insurance subsidiaries, this can be with or without foreign participation. That is, banks have a subsidiary of insurance business. Like you must have heard about ICICI Prudential Life Insurance, HDFC also. So these all banks which have insurance subsidiaries as insurance, the companies which belong to insurance sector, that is fully integrated service. Now coming to standalone insurance product, in this case, it means it involves marketing the insurance products either referral arrangement or through corporate agency without mixing the insurance products with any of the bank's own products. So it is, I mean, insurance is given a separate status here. So it is, the insurance product is sold as one more item in the list of products. So it is basically adding one more product in the product line. And like for example, Karur Vyasa Bank Limited selling the life insurance product of Birla Sun Life Insurance. So this is a case of standalone insurance. So these are all the models of bank insurance, and this is just a summarized view of all the models.